is we're going to use the TBT as our instrument. So the TBT is a inverse ETF of the bond market. So of the 20-year bond, or the long bond, basically the 20-year, the 30-year, it mirrors the inverse of the long bond, and it's also a double leveraged inverse. So it's a 2x. So for example, if the bond market goes down 1%, the TBT will go up 2%. So that's how the inverse ETFs work. So if the bond market goes down 1%, the TBT is going to go up 2%. So if the bond market comes down 10%, the TBT is going to go up 20%. And obviously, if the bond market comes down 50%, then the TBT is going to go up 100%. So the key is we need to structure this trade, because we don't know exactly when this kind of an interest rate is going to go up. We can't say what that's going to how that's going to play out. So what we're going to do is we're going to construct a TBT diagonal trade. And what we mean by diagonal is, you should have gone through the course on diagonals. The diagonal is a time spread. So it's like a calendar, except for we're not putting it on the same strike price. And also the long end of the diagonal trade, which is where we buy our option, that part of the trade is going to go out about 1 to 2 years at least. Obviously, we have options on all the major stocks and indices. We have options that go out 2 years, and those are called leaps. They are long-term option series. And what we're going to do is we're going to go, we know that TBT is going to increase at some point. So obviously then we want to buy a call option on the TBT, and we're going to go out about 2 years. We're going to go out as far as we can. After looking at the option chain, we'll decide how far out we need to go. And obviously the further you go, you're going to pay more in your option premium. And you're also going to have time decay, but the time decay element is going to be very little, because you're going out so much in time, and so your theta decay is going to be very minimal. But to offset your theta decay and to generate some sort of an income from this trade on a monthly basis, what we're going to do is we're going to sell a call option that is much more shorter term. So in effect, what we can do is we can have this trade flow on a continuous basis, on a month-to-month basis, and we'll even try to generate monthly income out of this trade. But the primary goal of this trade is to get the prices of TBT right now, because TBT is probably at its lowest point at this point. And so you want to position for this big move, because when the move starts happening, you don't want to be late into that trade. So that's the whole philosophy of this trade. It's very different from all the other trades that we look at, because this is a much more longer term trade. But we want to structure a TBT diagonal trade, and if you feel that interest rates are obviously going to go higher at some point, then this is the kind of trade you would need to put on. Now bear in mind, we saw this kind of a sentiment back in the early 80s also. So if you